Happy morning again, people. So, first topic of our syllabus called what, sir? Ind AS 16 Property, Plant and Equipment. Okay, we have studied, you have studied this particular standard called Accounting Standard 10 in your CA Intermediate. Sir, any difference between AS 10 and Ind AS 16? Ditto. I mean, this topic skip us, sir. I will bunk this class, sir. No, sir. Okay. So there were a few concepts which was not tested at intermediate level. They are very important at final level. Okay. The concepts are same. Application of the concepts you will see newly over here in this particular standard. Okay. Sir, what is this Ind AS, sir? Sir, Ind AS is international standards. Accounting standard is our local standards. ICI has drafted a standard, no, that we call it as accounting standards. Now, majority of the countries, now obviously it's a global economy, no, sir. These days, now people are sitting in Bangalore, they are working for Japanese company. Right now, you can sit anywhere and work for any company. So it's become all global now. That's the reason the standard setters have thought that anyway, business has become global. Why don't we make accounting standard also global? So the global standard they introduced called IFRS, International Financial Reporting Standards. Now, we are Indians. We don't like to take the things as it is and do copy paste. We need our garam masalas. Yes, no, correct. Whatever it is, no, we need some garam masala. So what India has done is they have taken IFRS. Okay, wherever required, we have given some tadkas, garam masalas we have added. Okay, and that newly we have given namakarana called Ind AS. So India, no sir, has not, we say India has not copy pasted IFRS. We say India has converged to IFRS. Converging means we have taken wherever required, we made some changes. That's the reason we have given a new name called Ind AS. So basically Ind AS are Indian version of international standards. That's all it is. So that means in our syllabus, we only have this, sir. Yes, sir. 99.999% of your syllabus is only Ind AS. Other than this, we have one or two chintu pintu topics. That is nothing. Okay, and they are not that important also. But anyway, nothing much to study in them also. So the major focus of our syllabus is going to be around Ind AS. So we have many Ind AS, around 35 plus Ind AS we have currently, which we have to study. Okay. Now, sir, which company has to follow Ind AS, sir? Sir, don't worry about which companies and all have to follow Ind AS. Not every company will not follow Ind AS. Some companies will follow accounting standards. Some company will follow Ind AS. Which companies have to follow, no? That is given in a standard called Ind AS 1. Ind AS 1 talks about which all companies have to apply Ind AS. It's simply some limits. Okay, listed companies, if net worth is 500 crores or more, like that, they've given some limits. Okay, that is just what, sir, remembering and vomiting. That's all it is. Simple. Okay, there is nothing much, no dumb in that. We'll talk about all that later on. First, today, I don't want to take up a mug up wala topic. So it is okay, there is nothing in that. Because anyway, we rest assured that if you are working in a corporate, after clearing examination, some of you may go for corporate. No, all your corporate clients will be following only Ind AS. Okay. So because they will satisfy those limits. So don't need to worry about that. We'll talk about which companies has to apply and all. We will do it. But someday when we are bored, no, when you are also bored, I am also bored. That day we will take up this one topic, chintu pintu topic, and finish it off. For now, know that all the companies which you going to work for will anyway apply Ind AS. Okay. Now, as I told you, many Ind ASs are interlinked. Okay, so I would like to start with this particular standard because Ind AS ka 16 ka reference we will see in Ind AS 38, Ind AS 40, again in Ind AS 105, again in Ind AS 36. So that's the reason I am starting my particular first session with Ind AS 16. Okay, all right. Now Ind AS 16 talks about what, sir? Property, plant and equipment. Now earlier this was known as fixed asset. Okay, now we have given anyway new name instead of fixed asset. Now the naming has been changed to property, plant and equipment. For our class purpose, we'll call it as PPE. Okay, that's all it is. Even accounting standard 10 also said the same thing. Okay, even there also it is no more fixed asset. We call it as property, plant and equipment only. All right, all the fixed assets we call it as PPE now. Now, how those fixed assets ka recognition should happen, measurement should happen, disclosure should happen, Ind AS 16 gives the guidance. Okay, so why is this standard required, sir? This standard was required because with respect to some assets, some clarity was required. Like to give you an example, what's your name? Balaji, you said, no? Balaji, I met him. He told, sir, I'm looking for a rank. I'm working towards a rank. That boosted my day. Like, oh wow, nice. A rank, potential rank holder in the class. It's always a big pride for the teachers, no? Yeah. Alright. Now our Balaji, let's say, which rank you want, macha? He's like, when I'm taking, I'll take first one only. Why should I settle for less? Confidence, I tell you. Super, macha. You will get it. Okay. Let us say Balaji scored. Let us say Balaji got All India rank 1. Chappal. What did you? Yeah, he got it. Look at that confidence. At least once you should give hand. No. Yeah. So let us say Balaji secured All India rank 1. I don't know still why he's attending our classes. Probably he's testing my knowledge. Whether this guy knows or not. That's his motto. Okay. Anyway, he's come down, so we are happy to have him. So he joined a company called Reliance. Okay. Fine. First day, Balaji went into Reliance office. Now he went in. Obviously, company means they will have many assets. Now, Balaji went into the premises and he saw that Reliance owns a building. Reliance owns a building. Now, I will give you a certain examples. You have to tell me whether they are property, plant and equipment or not. Whether they are PP or not. You need to answer them. Okay. Balaji saw building. Is building a property, plant and equipment? For Reliance, is building a PP. Online also go on responding. If you think it's a yes, type Y. If you think it's no, type N. So what do you think this is? This is a yes. Okay, fair enough. Sir, in that building, no, in the basement, I'll add one more. Okay, Balaji saw ambulance. Balaji saw ambulance. I'm not able to erase this, huh? Okay, no problem. Okay, Balaji saw ambulance because Reliance is employee-friendly company. They thought if any employee gets sick, so it's instead of waiting for an ambulance, let's have an ambulance ready so that it will help the respective employees. Now this ambulance costed the Reliance, let's say 50 lakh rupees. Is this ambulance a property, plant and equipment for Reliance? Pakana? Okay, ambulance according to you is yes. Okay, now this particular Reliance company, they have some plant and machinery. Is plant and machinery a property, plant and equipment? Yes. Okay, they have some furniture. In the receptionist area for the visitors, not for the employees. They have installed some fancy sofa set and all they've installed. Where? In receptionist area. Is this furniture that is kept in the receptionist area where no employee is accessing, is it a property, plant and equipment? Yes, sir. Okay, fine. I'll take your answer. We'll see yes or wrong later on. Next is, let us say Balaji was first day, he was roaming around the office. Okay, he saw that Reliance has gym equipments. They have a gym room. In that gym room, they have some gym equipment. They also have a sports room where they have some sports equipments. And they also have some paintings. Michelangelo's painting where they paid 10 crore rupees. Cash rich people, no. Okay. Probably they got it from Gandhi Bazaar, we don't know. Yeah, but anyways, Reliance paid how much? 10 crore rupees for that painting. Now this painting, sports equipment, gym equipment, is it a property, plant and equipment for Reliance? Yes or no? Paka? Yes. So what about, this one anyway is covered. Now, sir, when I said building machinery furniture, I think the answer was bindas for everybody. Pakka property, plant and equipment. But when I said to gym, painting, water purifier, all this, you have clarity or there may be some confusion? There may be some confusion coming in your head. Suppose if I tell painting is only 1 lakh means? Instead of 10 crore, if I say it's only 1 lakh means? There is some little bit of buku confusion. Yes or no? To sort out that confusion only, we have Ind AS 60. Because these days, the economic has become so dynamic that all assets are not plain. Okay, we have many assets like this where we needed some guidance whether they are property, plant and equipment or not. That guidance only is given in Ind AS 60. Now, we will not worry about the answer to this question. What Ind AS does is, they will not give answers to these questions individually. They will frame a definition and usually some recognition criteria. Whichever component satisfies the definition, they will be classified as PP. Otherwise, they are not. So first we will go back to the definition. We will learn them. Then we will revisit this and then look at the right or wrong answer, whatever it is. Can we go further? Okay. Online also till you are fine. One more. Is my pace okay? The pace at which I'm speaking, are you comfortable with that? Am I speaking fast, too slow or okay now? Here, everybody all cool. What about online also work in early morning, especially online? I don't know what and all you're watching. Yeah, one side classes, another side we don't know. God knows. Yeah. All right, but still okay, no machas and machis. Everything perfect. Thanks, Karthik. All good, sir. Thank you. Okay, move on to the next one then. All right. Now, sir, if you want to call something as a property, plant and equipment, if you want to call a component as a PP, same definition was given in AS 10 also. Anybody remembers? Let's test our inter-memory. No need to raise hands much. Go on. Bendas. Ours is open floor, open market. Okay, go for it. Tangible asset, held for use. Rendering of services, administrative purpose or for rental purpose and expected to be used for more than 12 years. Super. Someone has intercouple things, he's kept it in his mind like that sharper. It's like a stamp. He's put it off. Perfect. It's the same definition. If you want to call it as PP, three criteria should be satisfied. One, it should be a tangible asset. First, I'll go through that and then we will review it one by one. One, it should be a tangible item or tangible asset. And it should be held for use. That property, plant and equipment, you should use it. Usage is for one of the four purposes. Either one of the four purposes. Either you should use that PP to give some, or to produce some goods, or render some service, or administrative purpose, or rental purpose. If you want to call it as PP, for one of these four purposes, you should compulsorily utilize them. That's a second criteria. Third one, that usage should be for more than 12 months. Because by default, I think our 11th standard teachers have already made it into our head saying, sir, if you want to call something as fixed asset, it is less than 1 year or more than 1 year. More than. This is what third definition is trying to say. If you want to call it as PP, that usage should be for more than 12 months. It should last for more than 12 months. Okay, sir. Let's go a little dive into further. One, it should be a tangible asset. Tangible means you should be able to touch, see and feel. Okay, so if you want to call it as PP, you should be able to touch, see and feel them. That's the tangible asset ka first component. Second one, it should be held for use. That PP, you should use it either to produce goods. Like if any manufacturing company, if they buy machinery, obviously they're going to use it to produce goods. That is one. Or it should be used to render some service. Now, are we selling you any goods? No, we're giving you a service. Now, why am I using this iPad or TV, laptop and all? To sell goods or to give us service? Obviously, your articleship students, you also have laptop. Correct. Now, you are using the laptop to give an auditing or some service. Right. Now, that's the second part of the definition which they're trying to talk about. Render a service. Third one is the most important one, which is the administrative purpose. Admin purpose. So, if this definition was not there, if this admin was not there, no, majority of the PP would have been transferred off to P&L account. Because there are many assets which the company uses. They will not be used to produce any goods, nor they will be used to give any service. Like, let's say our academy example, we have installed an AC in receptionist area. We have installed an AC in receptionist area. Am I rendering any service in receptionist area? No. Obviously, I can't give any goods because I'm a service industry. That means, since I'm installed AC in receptionist area, am I using that to give any service? No. But they are necessary for what purpose? Administering your business. That means all this gimmu and all whatever we told, no, everything also are PP, they'll come under which category? Administrative purpose. Even ambulance also. In fact, all the answers which you have specified is correct. Okay. So if even administrative assets, this water purifier, gym equipments, paintings, okay, whatever, all that creative assets, whatever you have brought into the business, they are also PP only because they come under which category? Administrative purpose wala category. Okay, answer is sorted. All right. Next one is, or it should be used for, if it is not used for administrative purpose, at least it should be used for rental purpose. You should rent out that PP to someone and get some rental income out of it. Okay. Rental part will be more covering under Ind AS 40 next later, and after 2-3-4 days, maybe that particular standard will come. So this is held for use ka definition. Any confusion in this so far or all okay? All okay? Alright, the last one is it should be used for more than 12 months. So in PP means it should last in your business for more than 12 months. That's the thing. So this is the definition. Okay, let's recap. As I told on the day, before I started, everything we will learn in the class. If something has to be remembered means we will remember in the class. Okay, you are paid full fees, no? So fully let's do it in the class. I know that all this you can manage. In fact, I can save time. I've discussed all this. I can move on to the next. But why I prefer to revise the things also more often in classes? Because of your articleship commitments. I know no matter what you say, no, beyond 45 minutes, you may not be having time to study. So let's study and let's try to revise as much as possible in the class only, so that once the class is over, you should walk out of that with a happy face saying, today's class worth it. Like after the food, you have no, I mean, that is probably too much of extra feeling. So, okay, at least you should have that satisfaction that whatever we did today, we have revised it, I remember it. That confidence you should have. So for that, we'll be recapping it frequently. Not to bore you, just to make sure that we retain it. Okay, tell me, sir, what is it again? If you want to call it as PP, 3 definitions. What are the 3 definitions? One, it should be a tangible asset. Second one, it should be held for use. The usage could be one of the 4 purposes, either to produce goods or render a service or administrative purpose or rental purpose. And the third one is that usage should be for more than 12 months or 1 year. So if this is satisfied, means you can call a component as a PP. Okay, this is a definition of a PP as per Ind AS 16 as well as Accounting Standard 10, same thing. But one more is there. If you want to show PP in balance sheet, there are 2 recognition criteria. Anybody remembers what are those? FEB, future economic benefits, and cost measurement. Same thing. If you want to show PP in your balance sheet, there are 2 more recognition criteria called FEBO. What is this FEBO? Not your February. FEB here stands for future economic benefits. Okay. Second one is cost measurement. FEB and cost measurement. So what is this FEBO? Full form is future economic benefits. Meaning, so obviously we will purchase this iPad randomly, just like that. Yeah. Now we are in coaching business. Just like that, will we purchase this iPad? No. Keeping what intention in mind we will purchase this iPad? We will get some benefits. Yes, no. Obviously, we will use this iPad to conduct classes. When we conduct classes, we will get more revenue or more sales, right? That is what we mean by future economic benefits. Future economic benefits here refers to from that PP, you should be able to get some benefits. And the standard says it's not necessary you should get the benefits immediately. If you feel you will get the benefits after 6 months, after 1 year, after 2 years, it is still fine. That is good. Okay, you might be getting the benefits immediately, or if you are expecting to receive benefits in future, that is also acceptable. Okay, that's what FEB stands here for. So usually future economic benefits means either it will be an increase in sales. Due to this PP, your sales will increase, or it could be a reduction in cost. That could also be there, or indirect benefits are also considered. Like your gym equipments and all, no, they will decrease the cost. No, they will increase the sales. No, but it will increase the morale of the employees. Employees will feel good after working out. Yes or no? So if employee morale increases, means obviously it will have a benefit to the company. All those are what, sir? Indirect benefits. Even indirect benefits are also considered as a FEB only for this particular application purpose. So FEB and cost measurement. So that means if you want to show PP in your balance sheet, there are totally 5 criteria. 5 criteria. Tell me once again, what are those? One, it should be a tangible asset. It should be held for use. Usage should be either to produce goods or render service or administrative purpose or rental purpose. And the usage should be for more than 12 months or 1 year. That is your definition. But if you want to show PP in balance sheet, there are 2 more recognition criteria. For class purpose, we are remembering them as FEB and cost measurement. FEB means because of full form is future economic benefits. Meaning is from that PP, entity should be expecting to receive some benefits. Either they are already receiving benefits or they are expecting to receive the benefits. Next one is cost measurement. Cost measurement means how much you spent for that PP, you should be able to tell reliably. Obviously, if I purchase this iPad, means I have to give money. Let's say I paid 1 lakh rupees to buy this iPad. I mean that 1 lakh only becomes my what? Cost. So how much you spent for that PP, you should be able to measure it reliably. That's your cost measurement wala drum. Okay, give you a minute, and no need to update all this. If you want to make short notes, I am absolutely through with that. Okay, but I mean, but anyways, I leave it to the students. Some students, no sir, usually they say scientifically it is proved that as and when you're listening to the classes, if you make a short notes, right, then you tend to remember those things for a longer duration. So if some of you want to follow that, that's absolutely fine. Some of them will say, no, sir, I can't do multitasking and all. I only like to listen. Okay. If that is the case, no problem. Whatever this notes is there, now I will share it with you. Whatever comments, whatever I've written here, I will share it with you so you can refer it to it later on. It may not come in the printable format, but it will definitely be in the viewable format. And you don't have to print this and mug this up. Okay. Usually straightforward questions will not come. Okay. So they will use all this as a question later on. That we will see later. So I will be sharing after the class is over. I'll be sharing this file with you. And recorded students also don't have to worry. We will upload this file on your app itself. And it will be available. You can download it and later on refer it to it whenever you want. Okay. That is done. Can I move on to the next section of things? Okay. So today's agenda is simple. Conceptually, I want to cover all the concepts along with few questions. Tomorrow and day after, we'll be applying all those questions. That will be the more exam relevant topic. But unless you know the concepts, you'll not be able to solve the questions. That's how it is. Fine. Okay. Wait or carry on? Carry on. What else is there? Okay. Now, sir, this particular Ind AS 16. Online also, okay, no, sir. I'll keep asking. Don't feel bad. Keep responding. It's just that I'm a little scared where you'll go like this. Yeah, that's all it is. Okay. Awesome. Good. Sir, tomorrow, pakka, sir, let's proceed, sir. Awesome. Okay. Ind AS 16, sir, will not apply. This particular standard, will not apply to few components. One, it will not apply to those property, plant and equipment held for sale. What is that? Ind AS 16 is not applicable for those PPEs held for sale. Held for sale means I have not yet sold. Let's say I am having this iPad. I have purchased this iPad. I don't want to use it anymore. I want to sell it. Have I already sold? No. But what is my intention? To use it or to sell it? Sell it. If you have any intention to sell a PP, then we have a separate standard called Ind AS 105 called non-current assets held for sale. So hence that standard will get triggered. Okay, if you have an intention. Okay, if you have already sold means is it PP or anyway gone? Anyway gone. The moment a PP becomes held for sale, then you can't apply Ind AS 16. You have to apply which standard ka provision? Ind AS 105. After 4 or 5 days, I'll take up Ind AS 105 also. That is one. Second one is if you have any biological assets used in agricultural activity. What is it? Biological assets used for agricultural activity. So biological assets means plants and animals. Plants, living plants and animals, we call it as a biological assets. So if you have living plants and animals which are used for what activity? Agricultural activity, then we have a separate standard called Ind AS 41 for it. Ind AS 41 separate standard is there called agriculture. That standard talks about it. Hence, Ind AS 16 is not applicable to that particular asset. Okay, Ji? But there is an exception to this rule called bearer plant. Biological assets other than bearer plant. Meaning exception of exception is applicability. So, for bearer plant, Ind AS 16 will apply. Okay, for bearer plant, Ind AS 16 very much applies. For other plants and animals, Ind AS 41 will get triggered. Okay, Saru. Alright. Sir, what is this BP bearer plant to? We'll talk about that. Next session is that only. First, we'll look complete of this. The third one is if you have any coal mine, gold mine, those exploration assets. You have Ind AS 106. Right now, Ind AS 106 is not there in our syllabus, so we don't have to worry. So, hence, for these sort of exploration assets also, Ind AS 16 is not applicable. These are all exceptions. At best, 2 marker ka MCQ question may turn up. Not that very popular, but we'll not worry about that. We will try to cover everything. Okay, Ji? This is a funda. Move on to the next one. Now, one thing probably lingering in your mind is what is this bearer plant? Because the provision said what? For biological assets used for agricultural activity, Ind AS 16 does not apply. Which standard will apply? Ind AS 41. But there is an exception to this rule called bearer plant. So, for bearer plant is Ind AS 16 applicable? Very much yes. What is this bearer plant? Even in CA intermediate, if you remember, I used to give mango tree example. Same thing. Because all these are same concept, same example. Why should I put extra efforts? Copy paste from there. Yes, no. Yeah. Alright. What is this bearer plant? Okay. First, maybe I'll tell you the condition. Then we will look at an example and probably we'll see. Sir, if you want to call a plant, if you want to call a living plant as a bearer plant, it should satisfy 3 criteria. It should satisfy 3 conditions. 1, it must be used in the production or supply of agricultural produce. Once I'll call out, then we will decode it, simplify it further. It must be used in the production or supply of agricultural produce. It must bear the produce for more than 12 months or 1 year. Third one, it has a remote likelihood of being sold as agricultural produce except for incidental scrap sale. There's a definition. I think Goinda. go in the, I think so, or maybe if it's not going also, not a big deal. Let's take a small example and try to understand this. Now let's test whether this mango tree is, whether it is considered as a bearer plant. Whether this is a mango tree or apple tree, can we call that as a bearer plant? So if you want to call a mango tree as a bearer plant, is first criteria for a plant to be considered as bearer plant is it must be used in the production or supply of agricultural produce. Meaning from this tree you should get an agricultural produce. From mango tree what will you get? Pineapple. From mango tree obviously you will get what? Mangoes. Mango is a factory product, factory produce or agri produce? Agri produce. That's the first condition for bearer plant. If you want to call something a plant as a bearer plant, means from that plant you should get some agricultural produce. Self-explanatory. Can I move on to the second one? Second one, if you want to call it as bearer plant, means you should get this mangoes not just for 1 year but for more than 1 year. Because PP means, see, now you're for bearer plant, which standard will apply? Ind AS 16. Ind AS 16 means property, plant and equipment. PP means it will last for less than 1 year or more than 1 year. That is what second condition is trying to say. If you want to call a plant as a bearer plant and apply Ind AS 16, that plant should give agricultural produce for more than 12 months. Meaning from this mango tree, you should get mangoes for more than 1 year. As per as my limited agricultural knowledge goes, okay, mango tree if you have means you will get the mangoes for more than 1 year. I don't know how many years. How many years anyone knows? 25. That means I am in safe hand. This is a good example then, yeah, because even I don't know agricultural knowledge, yeah. All right. So if you want to call it as means you should get that agri produce for more than 12 months. That is one. Third one is, let's take a small example. Let's say there is a farmer. You know that farmer ka business is very simple. He will plant the mango tree. Okay, he'll plant the mango seed and make sure that he has a mango plant. From that mango plant, he'll get what? Mangoes. Once he gets the mangoes, he will pluck the mangoes, remove the mangoes and sell. Once mangoes, all the mangoes are removed, no? Tree also he will cut. Tree also he will cut and sell it to the timber industry. Sell it to the wood industry. Every year, farmer does this. Plant, get the mangoes, and after mangoes are received, cut the tree also and sell the tree to the timber industry. Now you tell me, can mango tree be considered as a PP? No. Because what is the main business of farmer here? Only selling mangoes or also to sell mango trees? Mango tree. That is the third criteria is what they're trying to say. The tree should not be sold in the regular course. So only mangoes, in this example, only mangoes you should sell it in your regular course of business. Tree you should protect it. Okay. Tree itself if you are selling regularly means then that tree is not a bearer plant. It becomes your something which you sell in your regular course of business only. We call it as what? Inventory. So if farmer is selling tree regularly means that tree becomes your inventory. For inventory, we have separate standard called Ind AS 2. We need to apply that. This is what third criteria is trying to say. The tree should not be sold in the regular course of business. Does that mean the tree should never be cut? No. What if the tree has become sick? If it is giving weird color mangoes, black color mangoes you want to buy? No. If it starts giving you black color mangoes, what do you think farmer will do? Obviously, cut that tree and replace it with a new one. So as a scrap sale, you can sell the tree, but you cannot sell the tree in your ordinary course of business. That is what this criteria. If all the three criteria are satisfied, then a plant becomes bearer plant. And if it is a bearer plant, which standard will apply? Ind AS 16 will apply. Now clear with this? Sir, should we have to remember all this, sir? Sir, as per as the way I have seen, straightforward questions will not come. Like explain bearer plant, like that and all questions we hardly see. In fact, I have not seen. But you never know ICI. So far, they have not done it. Usually, what they'll do is they may use all this to ask an MCQ question. Okay. So it's not that you need to mug up the definition. If you know the meaning of the definition, I think in my view, that is good enough. If you remember it, nothing like it. Awesome of the awesomest. Otherwise, at least know the meaning. That's fine. If you're through, next one. After 4-5 concepts are done, then we will recap everything and then move on to the next one. That's okay, no? Okay, next one, online. Polama. Artha question, artha concept, paklama. Yes, sir. Okay, next one is spare parts and standby equipment. Now, sir, ArivuPro, we have an inverter. Okay. Now, inverter, will we use it daily? Thanks to our government, We are unfortunately or fortunately using it daily. But inverter and generators and all, we use it regularly, sir? No. Only if there is a power cut, we will use the inverters or generators. Yes, sir. Now, is that generator a property, plant and equipment? That generator only we call it a standby. Standby equipment means we will use it only if required. Here the requirement being if there is a power cut, then only we will use it. So standby, that's nothing but गाड़ी का खोया है क्या? नहीं चाहिए, छोड़. Okay. All right. Next one is spare parts. Spare, you got the meaning of standby equipment, na? Spare parts is, let's say a company has a plant and machinery. This plant and machinery, sir, it has many parts. It has many parts. Many parts have been assembled and made as one property, plant and equipment. In this many parts, one part is very critical. Okay, meaning if that one part is not there, means the whole machinery will not function. And this one critical part I have to import from UK. And the lead time is 1 month. Lead time as in? If I place the order today, I will get it only after 1 month. Okay, now what will I do? You tell me if this is the case, means will I take a chance or will I keep some spare of this? I will obviously, do you think this critical part I'll only keep one or I'll buy more? I'll buy more than one and keep it just for safety purpose. All that becomes your spare parts. So what should we do for the spare parts in standby equipment? Standard is very simple. Okay, now if you want to recognize PP in your balance sheet, what do you have to do? How many conditions are there? 5 conditions. This is what they're trying to say. If those conditions are satisfied, go ahead and recognize it as the PP. If the condition is failed, means recognize it as an inventory. So standby equipment and spare parts will either be recognized as a PP or it will be recognized as a inventory. If condition is satisfied, then it will be recognized in your balance sheet as a property, plant and equipment. Otherwise, it will be classified in your balance sheet as an inventory. That's all it is. Done, sir? Now, sir, I'll tell you, one way I told you, this batch I'm planning to reduce some few hours. How I'm planning to reduce also, I will tell you. In the last batch, you know what I did? You are seeing all these remarks. All that physically I used to write in class. Okay. So now since students told reduce some hours, I thought let me also conserve my energy. So this time around, all this example I have updated and come. So that we just have to discuss. So like this, each standard will be able to save some half an hour to 1 hour. Like that at total level, if I do it, I feel around 25-30 hours we can save. Is this approach okay with you or you want me to put mehnat? You want me to put hard work or this is okay? This is okay. Anyway, I'm sharing this file. That is a strategy we are using to save a little bit time. That's the thing. That's the reason we took little extra time last batch. This batch, hopefully we will take it a little lesser. Done, Asaru? Yes, Asaru. Online also comfortable now. I'll be sharing with you the file. Not a big deal. Okay, next one, this is over. Next one is cost of day-to-day servicing. Sir, obviously, if you have any property, plant and equipment, you need to get them periodically serviced. Like when you have a bike, you will give it for service. So that service charges and all what you pay, will you capitalize? Will you show it as PP? No. That routine maintenance charges, service charges and all. No, sir, you will transfer it off to P&L. It will not be capitalized. It will be transferred to P&L. And in our final, we will not call it as P&L. We will refer it to as SPL. SPL means statement of profit or loss. So henceforth, wherever I refer it as SPL, it simply means P&L. You can write P&L also, but in our material, major reference is given for statement of profit or loss. So I will call that as what, sir? SPL. So this routine servicing expenditure and all maintenance expenditure straight away goes off to SPL. You will not capitalize them. This is the funda around first 3-4 concepts. Easy. Okay. Now 2 minutes. Let's have one more quick 2 minutes recap. Which standard? Now you should do fatafat. Which standard? Ind AS 16. Full form? Ind AS 16 talks about property, plant and equipment. Okay. Ind AS 16 is not applicable for few things. What are those? Non-applicability. One, it is not applicable for held for use assets. Held for sale assets. Once the PP is classified as held for sale, you cannot apply Ind AS 16 because we have Ind AS 105 for it. Next one. Biological assets used for agricultural activity. But there is one exception to this biological assets. First of all, biological assets means living plants and animals. All living plants will come under Ind AS 41? No. Bearer plant will come under Ind AS 60. All other plants will come under Ind AS 41 agriculture. Then if you have any exploration assets, coal mine, gold mine, etc., all that again will be coming under Ind AS 106. That's your non-applicability. Then if you want to call a component as a PP, there are 3 definition criteria. What are those? One, it should be a tangible asset. Second one, it should be held for use. The usage should be either to produce goods or render of service or administrative purpose or rental purpose. And that usage should be for more than 12 months. Okay. Excuse me. Okay. Next we saw, that is the definition. Then we saw 2 recognition criteria. RC we will refer it as. What are the 2 RCs? FEB and cost measurement. FEB means from the TP, entity should be anticipating to get some future economic benefits. Second one, cost of that TP, you should be able to measure it reliably. Okay, that we saw. Next, I think we looked at what bearer plant. If you want to call some plant as a bearer plant, it has 3 definition criteria. What are those? From that plant, we can answer in our own words. That's fine. From that plant, you should be getting some agricultural produce. Second, and that agricultural produce you should get for less than 1 year or more than 1 year. More than 1 year. Third one, the tree you should not sell it in your regular course of business. Only that agri produce you should sell it in the regular course of business. The tree you should conserve it. That's one. If all the 3 are satisfied, then it becomes a plant becomes a bearer plant. And for bearer plant, Ind AS 16 only shall apply. Okay. Next we saw spare parts and standby equipment. Very simple. If the definition and RC is met means, then the standby equipment and all will be classified as PP. Otherwise, it will be shown in balance sheet as an inventory. And routine repairs and maintenance and all, you will capitalize or SPL. SPL. That's all we have summarized. Okay. Now, this is what I said. All this contents I have summarized in chart book. Now you tell me, if I put this content now in a small 1-line header, how much time it will take for you to revise? First time when we're doing it, now if I see the timeline is 36 minutes. But for you to revise, how much minute? Maximum 1 minute. Right? So that is the help of the chart book. I'll show you the chart book. When we revise it, I'll show you more how it helps. Okay, that is one. Now let me ask you an example. Okay, same example I used to give in Inter also, if you remember. Okay, I think I've written it. Okay, now IPL season Isala Kapo Nammade. Yeah, that we've been saying for how many seasons now? This is what, 17th or 18th season? 18th season, huh? Ayyo, at least this time, at least Papa. Let Kohli retire with 1 cup, at least Papa. That guy is slogging literally, huh? Okay, let us say our RCB, Royal Challengers Bengaluru, they paid, let's say they are paying 25 crore rupees to Virat Kohli every year. Virat Kohli is getting, I don't know the amount, I'm just saying. Let us say RCB is paying Virat Kohli how much? 25 crore. BCCI got excited. Our BCCI, okay, cricket body, right? They are saying, BCCI ka accountant is saying, I will show Virat Kohli as a PP in balance sheet. In BCCI ka balance sheet, okay, BCCI is saying, I will show Virat Kohli as a property plant and equipment. Okay, worth how much? 25 crores. Can we do this? Is it acceptable? Now, don't blindly say yes now. You have definition. What does the definition tell me? Tangible asset. Okay, Virat Kohli, can you see up our eyesight proper then? Okay, first criteria satisfied. Okay, second one, held for use. Obviously, BCCI is taking Kohli ka service and giving cricketing service. So, service criteria is getting satisfied. Third one, more than 12 months. As far as my knowledge goes, Virat Kohli has been playing since many years. Let's say BCCI feels Virat Kohli will play for another 3 years. Assumption. He will play for another 3 years. That means that criteria, third criteria of more than 12 months also is satisfied. Okay. Definition satisfied. Next, RC. What are the 2 RCs? FEB, future economic benefits. Obviously, due to Kohli, cricketing, there is a huge benefit to BCCI. He's been a big brand ambassador of cricket, off the field and on the field both. Yes or no? Whether we like it or hate it, that guy ka the process you should definitely appreciate. The diet and the way he runs like literally crazy. Yes, so even for one run and all, that work ethic definitely is a big takeaway from that person. Yes or no? That means what, sir? Is there any FEB due to Virat Kohli's cricket BCCI getting some future economic benefits? Yes. Cost can be measured reliably. Obviously, Virat Kohli is not working for BCCI at free of cost. BCCI is compensating. Let's say that amount is also 25 crores. Now, cost also can be measured reliably. All the 5 criteria satisfied. So accountant of BCCA looks to be in the right direction. No, no, sir. Why, sir? One second. All of you got the hitch here? So looking at the definition and RC, looks like this Virat Kohli is a property, plant and equipment for BCCA. The answer is still no. It is not a PP. It is not a PP. BCCA cannot show Virat Kohli as a PP. Why, sir? Perfect, Damacha. I think Ayush, Noda? Ayush should sit here. Best person. Awesome. Good. He is able to remember everything. Okay. Yes, sir. It looks like it is satisfying every criteria. One criteria it is actually failing. That no, yes, sir. Here we have written what's a tangible asset. Human beings are not assets. Why? Sir, if you want to call something as your asset, it should be within your control. Now, if let's say you have, what's your name, sir? Umang, right? Umang Tripathi, correct, Noda? Umang Tripathi, let's say, has 500 rupees Gandhi note in his pocket. Okay. Now, is it Umang's asset? That 500 rupees Gandhi note, is it Umang's asset? Yes, sir. Why? He can do whatever he wants with it, right now. He can use that 500 rupees and buy something. If he's crazy, he can tear it off. I think he might as well donate it to me. I'll be more than happy to accept it. Right or no? That means what, sir? That 500 rupees is entirely within his control. So if you want to call something as an asset, means it should be within your control from which you get all the benefits. Now, is Virat Kohli under BCCA control? Now in BCCA, tell Virat Kohli, tomorrow you become left-handed batsman. You become wicket keeper. Or can Virat Kohli, if he wants, can he retire tomorrow? Yes. Human beings are not within anybody's control. Hence, your human beings like Ratan Tata cannot show Ratan. Now, obviously, great man is no more there. Big respect. But anyways, Ambani and all, you cannot show. Reliance cannot show him as an asset. Because human beings are not within anybody's control. So hence, human beings fails the definition of asset criteria. That's the reason human beings are not an asset for a particular company. Is this okay with you now, sir? So to answer this question, yes or no? No. They are not an asset because since human beings are not an asset, because there is no control, they are not also not a property, plant and equipment. That's all. Summary of first page. Next question, next concept. No, Anna. By the way, online, where and all have you joined? Just curious. I think you guys, I don't have to answer. Everybody, I hopefully are from Bangalore only. Yeah. For your class and all, not that much seen that we will fly from one place to another. Huh? You're from Andhra? Yo, what a privilege, macha. Why Bangalore? Da? For art, yeah. Like not for your classes and all. I come for articles. So it was anyway close by, so I thought I'll give it a shot. Okay. He's like, okay, I take macha. Okay, Chennai. Qatar, someone is saying, oh, Qatar. Okay, that's nice. First FR batch. FR student from the other side. Okay. Tirupur, Tamil Nadu. Okay, great. Electronic City. Electronic City is not that far. You can come down. Happy to see you. Okay, no issues. Just saying. Others, Mangaluru, Madurai, Chennai. So looks like Talai City, Talaivar City, Mora. Okay, no issues. Happy to see you all. E-Road. Again, E-Road is also Tamil Nadu only, if my memory serves right. Correct, no? Okay. Super then. Anyone else? So it's basically South wala market is what we are catering to. Probably our Umang sir is, Umang, where are you from? Chhattisgarh, okay. And you have settled in?
No, I came here for job.
You came here for job and now you're giving it a shot. Fine. Awesome. So we have one North crowd. I'll take it. Yeah, settled. You're inter student now into final. Awesome. That is amazing to see. So come down. So let us all, because at inter level, no, majority of our students are recorded. Okay. So it is nice to see at least a name to that, face to that particular name. As I told, Skanda, Noda? No. Skanda and your? Pavani. Yeah. I think you told you were due to our recorded students of inter and now into. So nice. Sir, class is starting at 3:30 a.m. in Qatar. Oh yeah. Here also my wish was that I start the class early. These people didn't agree. Otherwise, here also I would have made it 4 o'clock class. But amazing dedication. It's nice to see that you're logging in and attending. Hats off. I'm sure that these things will give you dividends, rich dividends later. Okay. Because yes, sir, as I keep saying this in my class, if you want to achieve something, no, there is always a price tag to pay in life. If you want something big means there is always a price tag to pay. So bigger the price tag, bigger will be your achievement. Like for us, the compromise is what? If you want to crack this particular attempt, attending the class on time, though it is 6 o'clock. I know that some of you may have to get up at 4 o'clock, 4:30 to catch a bus or wherever you are and to come attend the class. Those are all your price tags, right? So it's not just for you, for us also, right? Even for us also, it is difficult to wake up at 6 o'clock, or not 6 o'clock actually, yeah, to wake up at 4 o'clock and to get ready and just come down and all is also a little difficult task also. Given a choice, if you ask me whether you start the class at 6 o'clock or will you do 7:30 to 11:30, I will choose obviously 7:30 to 11:30, 12, that is much better also, correct? But this is the price tag. If I have to survive in this field, if I have to thrive in this field, this is a compromise or a price tag I have to pay. Okay, I have to forego my Saturday and probably also my Sunday. Though I qualified my examination many years back, still studies so never left me only. Daily we have to study. You have to study once till you crack your examination. For us, so daily studies only. Correct. Now we are having multiple subjects means 11 o'clock and on some student will ask FM ka doubt. 11:15 someone will ask accounts ka AS ka doubt. Someone will be asking Ind AS ka doubt. That means everything we have to remember, right? So that's a price tag to pay, right? If you are willing to pay, probably I'll survive and do in this field. If I say who will do this, I have anyway cleared. Let them people do whatever they want. If my attitude becomes like that, can I be a good teacher or can I survive in this field? No. 1 or 2 attempts people will come, then we'll be like, hey, that guy, Anasinis. Don't, let's not go. Yes, no, obviously you'll get outdated. So like that. So it's okay. So don't worry too much about the compromises you are making. The bigger the compromises, bigger your achievement will be. Okay, so always aim high. So I really liked it when he said first rank. Whether he gets or not, it's a different issue, but he has an aim, no. It's always nice to have an aim to work for it. So that goal should be there, okay. So don't say if like someone asks you what you'll do, I'm clearing, sir. I will clear, sir. No, have a definite goal. Be like, no, sir, I want to score exemption. Let's have a goal and try to achieve in that field. Okay, always look to aim higher. If you're planning to write one group, try to incorporate both the groups. See what happens, what comes out of it. Okay, so have a bigger goal. So let's see how it works out as well. Okay, moving on to the next one. Awesome. Hopefully, Farzana, tomorrow also I'm going to see you, ma. Though it's 3:30 for you tomorrow also. Hopefully, I'll be able to see it. But anyways, yeah, I think I'll get to know. But I'm pretty sure that if you're showing this much of dedication, you will be. Great. Next one, important concept called replacement parts. Replacement parts. So what the hell is this replacement part? Now, sir, a property, plant and equipment means, will it last forever? No, at some point of time, you have to replace. So here we are not talking about replacing the whole PP. We are talking about replacing a particular part. Let's say in this particular classroom, I have, let's say, 100 furnitures, desk. One of them, no, sir, got corrupted due to whatever reason, maybe students' creativity, we don't know. Okay, one of them got corrupted means I need to replace a part of them, or maybe it's got partly damaged. Then I have to replace that part. So when a replacement decision is being done, what we should do? Obviously, to replace a part, we have to incur some money. The question now is that replacement part, will you capitalize it as a PP or you will transfer that expenditure to P&L? Will you transfer it to P&L or will you capitalize? That is what we are trying to study over here. Yes, people? Okay, here, sir, in this particular replacement section, there are two parts or two things we need to keep in mind. First, I'll tell you, then we will look at one example and review this little further. One is, sir, if you're replacing a new part, means new part can be capitalized. New part can be capitalized, provided RC is met. What is RC? Feb and cost measurement. That's the first thing. New part ka cost, you can add it to the cost of PP, meaning you can capitalize it provided recognition criteria is met. If recognition criteria is not met, means you transfer it to P&L account. Okay, that's the first criteria. However, this is one section or one part, one component. Another one is the old part ka carrying amount. If you have anything, you need to remove it or you need to derecognize. They'll not, standard does not use the word removal. They use the word derecognition. Derecognition simply means cancellation. So new part ka cost you can capitalize, but old part ka carrying amount you need to reduce it or remove it from your books. What is this? This is the provision. If you know this, this is sufficient for examination. Okay. Now what is this? Let's understand with the help of a small example. Okay. Sir, you purchased one electric car. Electric car you purchased. Which is your favorite car, pa? Which one? Electric car. Huh? Benz and all will not come in 20 lakhs. Okay. Tell something in budget. I don't want to change the number now. Okay. Tell within the budget. Tata Curve. Okay. Tata Curve is the car you purchased. Let's say. Okay. Electric car you purchased. And how much have you paid? 20 lakh rupees. Now, when you bought this car, no, the vendor told the car can last for 10 years. Useful life of the car is expected for 10 years. Okay. The vendor told absolutely no problem. 10 years. Full like makkan, like butter. Butter it will run. Okay. How many years? 10 years. Fine. But that vendor told battery you have to replace after 5 years. Electric car ka major component is a battery, right? So the battery of that car, they are saying you should replace after 5 years. This is okay with you now? A car. The overall car will last for how many years? 10 years. But one part in that car can last for 10 or only 5 years? 5 years. Okay, sir. Now, so far if you remember, we used to calculate depreciation on car. How we used to calculate depreciation on car? By taking what as an amount? 20 lakh. Tell me straight line method ka depreciation, how you calculate? Original cost minus salvage value divided by how much is the cost originally we paid? 20 lakh. Let's say salvage value is 0. Divided by life. Divided by life, what you will take? 5 or 10. Because here we have 1 life or 2 life. Main car will last for how many years? 10 years. But one part in that car only lasts for how many years? Right. Now the denominator should be 5 or 10. What should I do? Now this is what Ind AS 16 says. In fact, I discussed this with you in CA intermediate level. I told you you'll apply it mostly in CA final level. Okay. Now what is this? This scenario we call it as component accounting. We call it as component accounting. What is this component accounting is? If different components, if different components here refers to parts. If different parts have different useful life, then you need to calculate depreciation also separately. If different parts have different useful life means you can't calculate depreciation together, you need to calculate it separately. Like here, this particular car has how many parts? 2 parts. What are those 2 parts? Battery and others. Now these 2 parts have same life or different life? Different life. I mean this ka depreciation, battery ka depreciation calculate separately. Other parts ka depreciation you calculate separately. That is what we mean by component accounting. Yes, everybody? How to calculate? Very simple. Sir, let's just say out of this 20 lakh, towards battery you paid 5 lakh rupees. Let's assumption. Totally how much did you pay to purchase the car? 20 lakh. But today if you buy battery alone, today, how much it will cost? 5 lakh rupees. That means what is the breakup here? Out of this 20 lakh, it looks like you paid how much for battery? 5 lakh for the battery and 15 lakh you paid for the other parts. Yes or no? Now you calculate the debris for these separately. What is the useful life of the battery? 5 years. Useful life of the other parts? 10 years. Now calculate depreciation. You know how to calculate depreciation now? Separately. What is the original cost of battery? 5 lakh. Residual value expected? 0. Divided by useful life, don't take it as 10. Take it as only 5 years. That means battery will be depreciated every year how much? 1 lakh rupees. Every year you will depreciate battery by 1 lakh rupees. What about other parts? What is the original cost? 15 lakh. Salvage value how much? 0. Divided by life. Life is how much? 10 years. That means this other parts will be depreciated every year by how much? 1,50,000. Okay, Saru. That means what is the total depreciation related to this car? You can pass journal entry as 1. You don't have to pass separate entry for depreciation. Calculation you need to do it separately. Then pass 1 journal entry. For this, how much is the debris? 1 lakh. For this part, how much? 1.5. Both put together, how much is it? 2,50,000. So in your accounting records, you pass journal entry, depreciation account debit to car account, 2.5 lakh. That's what it is. This is what is component accounting ka working. Any confusion in this calculation? This is not the concept we are looking at, but to do the replacement parts, we need to be aware of this as well. Can I move on to the next? Now, 1 minute, sir. Sir, when I bought this car, I thought battery will come for how many years? 5 years. But bad vastu. Bad luck. Rahu, Ketu, Shani, we don't know who came on us. After 2 years only, battery dumber. Battery gone. We thought this battery will come for how many years? 5 years. But unfortunately, so nicely we have utilized, or thanks to our governments, okay, so road conditions and all, the battery got exhausted or it got damaged within 2 years. By the end of second year, the battery got damaged. Now, if battery has got damaged, means can I keep it or have to replace it? Have to replace it. Now we are coming back to the concept called replacement parts. Yes, sir. Okay, stop there, everybody. Okay, let us say, since this old battery at the end of second year, it has got damaged, I replaced it with a new battery. Sir, initially when I bought it, what was the battery ka value? 5 lakh. After 2 years also, its value will be 5 lakh only. Yeah? No, due to inflation, obviously cost would have increased. Now let's say the new battery ka cost has become 6 lakh rupees. Okay, sir, this is the data they've given it to you. After 2 years, we have replaced a new battery and new battery ka cost is 6 lakh rupees. For this scenario, what we have to do? It's the first thing. Okay, first tell me, sir, what is the carrying amount of the car? First of all, when are you replacing the battery? Now or after 2 years? That means tell me after 2 years, at the end of, at year 2 ending, what is the carrying amount of car? How much did you buy the car for? 20 lakh. Every year, how much are you depreciating it by? 2.5 lakh. 1 year, 2.5 lakh. For 2 years, how much? 5 lakh. That means what is the carrying amount of the car? At the end of second year, car ka carrying amount in your books is 50 lakh. So far, okay? Okay. Now a simple concept. Replacement parts ka just now we studied. Whenever you replace a parts, two things should come. Or two things we are supposed to do. What are those? New part ka carrying amount you can capitalize. You can add. That's the only thing or one more? Old part ka carrying amount, you need to keep it or remove it? You need to derecognize. These two things we need to do. One thing, one at a time, we will take it. Sir, what is the carrying amount of the car? 15 lakh rupees. How much did you replace the new part? How much did you pay? 6 lakh rupees. That means what you will do? So in this 15 lakh, 6 lakh rupees you can capitalize. Meaning you can add. You can add. Yes, yes, yes. Is that the only thing or you have to remove? You have to remove what? Old part. Common sense, sir. A car means it will have only one battery. Now this old battery is there in your car or physically it is removed? Physically, if you have removed the old battery means in the books mein old battery ka carrying amount should be there or that should also be removed. That should also be removed. That's what the standard is saying. Since physically that asset is not there, in the books also that part ka carrying amount you remove it. That you know it or you don't know. 15 lakh is a carrying amount of the old battery or whole car. That means one working note we need to put up for what? To find out what? Carrying amount of the old battery. No need to put. I think it's pretty straightforward. Can we review that? Okay, sir. When you bought the old battery, how much did you pay? 5. Every year you are depreciating old battery. How much? 1. Any doubt so far? You bought the old battery for how much? 5 lakh. Every year you are depreciating it. How much? 1 lakh. When did you replace this old battery? After 2 years. That means you have depreciated this old battery to how much extent? 1 lakh per annum for 2 years means what is the total depreciation? 2 lakh you have depreciated this old part. You bought it for 5 lakh. It has got depreciated to the extent of 2 lakh. So what is the carrying amount of the old battery remaining? 3 lakh. This one, is it included in this 15 lakh? Yes. But should we include this anymore or remove it? Since physically that battery is removed from your car, from books also you need to derecognize or remove 3 lakh rupees. So what I have to do here? Minus 3 lakh rupees. That's what I've done over here. 15 lakh minus old battery ka carrying amount you remove. New battery ka, new part ka carrying amount you capitalize. And you will get the revised carrying amount of the car. This is the section. Understood? All this I feel they can ask as a 2-marker ka MCQ question. Simple calculations. No? So as an MCQ, when they ask, you don't have to worry about the way you are presenting it. All you have to do is get the right answer. Nobody will check your working as such. I'll give you a minute. If you have any doubt, you can ask. If you're through, I'll carry on. Sir, I have a doubt, sir. When is the break, sir? Wait. Nothing, all cool, fine. Okay, next. Okay, 1 minute. Let's take this step a little further. Now you guide me. All this drama happened when? Second year ending. Tell me from third year onwards, how will you calculate depreciation? From third year onwards, how will you calculate depreciation? Now you tell me, sir, this 18 lakh rupees is the carrying amount of car. Carrying amount of the car, right? Sir, the whole car, other parts of the car will last for how many years? 10 years initially. How many years are already over? 2 years. That means this other parts of the car is still going to last for how many more years? 8 years. But this new battery, will it last for 8 years or battery ka life is only 5 years? That means again different components of PP have same life or different life? Different. That means can you calculate depreciation together or again separate? Again you'll have to separate. Initially you separated, no. Now again you'll have to separate. Okay. Now same calculation. What is the carrying amount of the car? 18 lakh rupees. Now in this 18 lakh, how much constitutes new battery ka value? How much did you pay for the new battery? 6 lakh. That means in this 18 lakh, new battery ka value is? In 18 lakh, if 6 lakh is towards battery, means balance 12 lakh will be for, balance as in 18 lakh minus 6 lakh will be for other parts, calculated separately. This new battery also is expected to last for how many years? 5 years. But this other parts will last for how many? Initially when you bought it, it was 10 years was the life, 2 years have already passed. That means the remaining life is only 8 years. Now again calculate the depreciation separately. How will you calculate depre? 6 lakh. Minus residual value is anyway 0, so hence I have not written, divided by life, which is 5 years. I mean, this new battery will be depreciated going forward every year for 1,20,000 per annum. What about other parts? 12 lakh minus residual value 0 divided by remaining life, which is 8 years. How much will be that? 1,50,000. Like this, the calculation will go. Done, sir? Okay. Just for your reference, I brought this. This approach is okay with you, no? Just to save a little time, I have did this calculation, that's all. Now, if you say this works, means next batch I will stick to this. Otherwise, next batch also 30 hours more only. Right. But I think at our level, we can manage this. And 30 hours saving is actually a good time. Right. I think it's still workable. Okay, people. So this is done now. Okay. Next one, happy news for you. Next concept also ditto. Next concept also ditto. Meaning, what is the next concept? Major inspection charges or overhaul charges. Sir, major inspection overall charges means as in repair charges, you could say. Major, not a minor one, not your routine repairs. Okay, major inspection charges or overall charges, if they give means you have to do the same above concept. What is that above concept? Relate and tell me. If you do a major inspection charges, what is? New inspection charges you will add. Old inspection ka carrying amount, if at all, if it is remaining, what you will do? Remove it or de-recognize. So what is this? Sir, let's say you are in the logistics industry. You operate a ship. You use a ship. Or let's you keep this maybe better example. Let's say you are in the cruise industry. Meaning you take the people on ship from one country to another. Let's say India to Sri Lanka. Okay. So you take the people on excursions, vacations on a ship. And big ship you have. You accommodate about, let's say, 3,000 people. That ship capacity is 3,000 people. Now, do you think government will allow you to run this business just like that, or they will intervene? Sir, 3,000 people you are carrying on the sea route. Something happens to your ship means 3,000 people kailasa. Yes, no. Do you think government will say, oh, okay, it's okay. Anyway, we have enough population. Take them and drown. They will allow or they will intervene? They will intervene. They will put some conditions. Yes or no? So if you are generally in airline industry or shipping industries and all, government will say regularly you have to get your thorough inspection of your asset. That ship should be subject to thorough inspection, or your aircraft should be subject to thorough inspection, not a minor one. They will check the entire condition of the ship, whether it is in the flying condition or seaworthy condition, they will check. That only we refer it to as what, sir? Major inspection or overhaul charges. So if you are incurring this, what you have to do? Same drama. Should I have to explain this further or got it? This one is okay. I mean, I'll take you an example through this, but conceptually what we have to do, are we comfortable with this? Can we look at some numbers on this or need a minute? Story, don't worry. I say, right, always stories. Too much blade they will put. So we will only concentrate on the things that are relevant from an examination per se. Meaning and how it is relevant for examination. That much if you know, good enough. Story and all bad. Not much time, we don't have it also, not required also. Okay, now can we review one question just to get this concept a little better? Same as this car. car example I gave you, same thing we'll have to apply it through one more example. Example is given in a ICA study material only. Let's run through that. A shipping company is required by the law to bring all the ships to dry dock every 5 years for a major inspection and overall. Sir, how many years once you need to get your inspection done? Every 5 years you need to get, because ship and all, no sir, it will not last for, it lasts for like 30, 40, 50 years and all, probably more. So every 5 years you need to do a thorough inspection, and then only you can proceed with your activity as per the law of the country. Overall expenditure, this is a story they have given, example, don't worry about that. Okay. A ship, let's say a company has purchased the ship for how much? 20 million. And the useful life of the ship is how much? 20 years. Must have an overall every 5 years. Okay. Estimated cost of overall is 5 million. Stop there. How much did you totally pay for the ship? Initially, how much did you pay for the ship? 20 million. So first time when you buy an asset, immediately it will be inspected, or inspection is already done. When you buy a first time an asset, inspection is already done. Now means out of this 20 million, how much is towards inspection? 5 million indirectly you have paid towards inspection. Balance 15 million is for the other parts of the ship or other components of the ship. Stop. Now the ship, all the components have same life or different life? Different life. What are those breakup? Tell me once again. So overall charges, you have to get it done once every 5 years. That means useful life of that overall component is only 5 years. But ship ka useful life is 20. That means again you need to segregate. In our previous example, we segregated as battery and other parts. Here we have to segregate it as what? Overall component and other parts, or you can call it a ship order. Now, same calculation. Can we review this quickly? So totally how much you paid for the ship? 20 million. In that 20 million, how much is for the inspection? 5. So that means this is towards 5. And that means for the ship, for other parts of the ship, how much did you pay? 15 million. Okay. What is the useful life of the overall charges? 5 years. What is the useful life of the ship when you bought it? 20 years. So calculate depreciation. How much will be the depreciation? So you bought it for 5 million. Overall charges and all will not have any salvage value. So residual value is 0. Divided by useful life, 5 years. So if you do it, how much is the depreciation you will get every year? 1 million. All the numbers are calculated in million. So overall charges you will depreciate every year by how much? 1 million. What about other components? 15 million minus residual value how much? 0. Divided by useful life how much? 20 years. So if you do this, you will get how much? 0.75 million. That means totally the ship is every year will get depreciated by total how much? Sir, you need to calculate these things separately. You can maintain an Excel sheet and calculate this. But accounting entry should be passed to separate journal entry, or one entry is good enough? One entry is good enough for both the amounts put together. Adding these two, what are you going to get totally? 1.1 million plus 0.75 you will get. 1.75 million is the total depreciation relating to this ship as an asset. Done, sir? Okay, G. Alright, now this is an example, so they've just given the data randomly. Okay, now sir, first let's find out now this overall charges and all. Okay, should you have to inspect it after 2 years or once every 5 years? First time now we have bought the asset. Inspection is already done. Next inspection will come when? After 5 years. So first tell me what is the carrying amount of the full ship after 5 years? At the end of 5th year, what is the carrying amount of the ship? How much did you buy it for? Very easy. How much did you buy the asset for? 20 million. 20 million you bought the asset for. Every year you are depreciating how much? 1.75. 1.75 is a depreciation per annum. Okay. We want carrying amount when? At the end of 5th year. So 1.75 is a depreciation for 1 year. For 5 years, how much is it? When you multiply, how much you're going to get? 1.75 into 5 if you do, you will get 8.7. You bought the ship for 20 million. In that 8.75 is already depreciated. Means what is the remaining carrying? 11.25 million. This is the first data. Hope all these numbers are looking good. No. After 5 years, you tell me what will happen. At the end of 5th year, what will happen? Again, you will have to get an inspection done. So first time your inspection cost was how much? 5 million. After 5 years also, do you think it will be 5 million or it would have increased? May have increased, we don't know. Have they given that data? Check. Actual overall cost incurred at the end of 5th year is 6 million rupees. Now, at the end of 5th year, when you incurred an inspection charges, it costed how much, sir? 6 million. Stop. Okay, now what you have to do? You guide me here. First, tell me the concept and tell me the numbers. First, tell me the concept. What do you have to do? This is what? This is what? New inspection charges. This is same like a replacement concept. So what do you have to do? New overall charges you will capitalize. Carrying amount of the old inspection charges, if at all it is remaining, you need to derecognize. These are the two things you have to do. Correct? No? Okay. How much is the new inspection charges? 6 million. So what can you do for that? Can you add this? Yes. So carrying amount of the ship was 11.25 million at the end of 5th year. To this new inspection charges you will add. Is that the only thing or one more? One more. What is that? Carrying amount of old inspection charges, if at all it is remaining. What do you have to do? Remove. In these cases and all, it will not be there. Because, sir, inspection charges ka useful life is how many years? 5 years. That means that old inspection charges has any carrying amount or fully depreciated? Fully depreciated. Like initially, when you bought the ship, how much did you pay for inspection charges? 5 million. How much are you depreciating overall charges every year by? 1 million. 1 million is the overall charges ka or old overall charges ka depreciation every year. How many years is over? 5 years. So 1 million for 1 year. For 5 years, how much is it? 5 million. You bought it for 5 million and it is fully depreciated. So what is the carrying amount? 0. 0 means should you have to do this or not required? Not required. In examination, you don't have to do this, but for your reference, I bought it. Okay. By chance, or maybe first I'll finish off this. So that means you will get the revised carrying amount. What will be the revised carrying amount? 17.25 million. This calculation, is everybody comfortable with this? No change? All cool?
Yes, sir.
Online also? Okay. Sir, suppose they tell 3rd year government put a sudden legal change and say you have to do an inspection. There was some fraud in your company, some case happened. Then now they told 3rd year get another inspection. In that case, old inspection charges would have fully got depreciated or it will have carrying. In that case, carrying will come. But if they give you a normal problem like this, old inspection charges anyway would have got fully depreciated. So even if you don't write this, it will not make any difference. Okay, that is one. Okay, now moving along. From 6th year onwards, what you will do? Again, can you do one accounting for, can you follow one working for depreciation or again segregate? Again segregate. Why? Because now what is the carrying amount of the ship at the end of 5th year? 17.25 million. Now again, from 6th year onwards, again you need to do two workings. One is for what, sir? Overall charges. Then for the others. Okay. In the 17.25 million, how much did you pay for the new inspection charges now? 6 million. So in the 17.25, 6 million is towards new overall charges and balance will be for the others. Done. Now this new overall charges ka useful life is what? 5 years, because you have to get the inspection done every 5 years. What about useful life of the other parts? When you bought the ship, the life was how many years? 20 years. Now you are in which year? You are at the end of 5th year. That means how much life is already passed? 5 years. That means the remaining life is 20 minus 5, which is 15 years. Now calculate the depreciation like this separately. Like this, every 5 years you have to go on doing the separate calculation. This is your component accounting. Usually this part they don't like to ask in the examination. One of this they will use, and usually these sort of things ICA prefers to ask as an MCQ question. And people, I know that though our paper has 30 marks MCQ question, don't freak out. I see many students freaking out. So MCQ, what to do? MCQ, nothing to do. Literally nothing to do. Because you cannot possibly prepare for MCQ. Sir, MCQ is like ICI ka gold mine. Anything and everything can be taken and made an MCQ question. Like from this only, I can create 5 to 6 MCQ questions. Here only. Like you can ask, what is first year ka? Here, check this. They can give you this data and say, what is first year ka overall charges depreciation? One MCQ. Another MCQ. What is other parts ka depreciation every year? Or they can say, what is 3 years ka put together depreciation? What is 5 years ka put together depreciation? What is carrying amount at the end of 5th year? What is the carrying amount at the end of 3rd year? What is the carrying amount at the end of 5th year or 6th year or 7th year? Like this one case they can take and ask 7-8 types of MCQ question. Can we prepare for all of them? Do we have to prepare or we know that? You know. So if you know the concept and if you have solved normal questions, automatically MCQ is also taken care. You don't have to put in any extra time and efforts for MCQ question. Okay. That's absolutely, don't worry about that. Just be clear on the concepts and the questions we solve in the class. More than enough. And the same MCQ question I say will not repeat. Because no, students also have creativity. Anyway, no negative marking. If I don't know even a single MCQ question, I will select everything as B only. B for Bangalore. In 30, at least 5 will be B, no? So at least I will get 5 marks. So do you think anybody will leave the MCQ question unanswered, or definitely they will answer? Definitely they will answer. By fluke, who knows? Vastu, Allah, Jesus, Shiva, whoever, right? Tick. What if it is right? 1 mark, swaha, yes or no? So I say he knows this. That's the reason they also will go on creating new MCQ question every attempt. Same will not repeat. So you don't need to have any separate preparation there at all, but do attempt an MCQ question. I mean, in your attempt, I don't know, some of you might be writing after 2 years and all. That time, check. If there is a negative marking, then be a little careful. That could be a little deal breaker. I don't know. My gut feel is it will come in. Looking at the 3 attempts every year now. Okay. 3, yeah, that's what they said, no? 3, currently 3, right? 3 attempts and all. So obviously, I say also would probably have a little bit control over the things. Because MCQ is, you don't know, it can work both ways also. Some students can be really lucky also. 30 marks is no small joke. Imagine ticking everything, just doing a flip of a coin and ticking. And fortunately, in 30 marks, 25 swaha means almost cleared, no sir. By doing nothing, 25 marks you did. I'm not saying go ahead with that preparation. See, I never advocate that. At your phase, no sir, you focus towards the preparations. Okay. See, at every stage, right, whatever is needed to be done, we should do, sir. Shortcuts and all, sir, okay, fine. I understand that you have some options. You'll do some jugaad and you may clear the paper. After clearing, what you'll do? When you go for practice, you'll tell the client that only. I skipped this concept in my class, macha. I did a flip of a coin and did MCQ question. So I will not take up your assignment. Can you say like that? No, you have to anyway do it. So at your level, focus. What needs to be done, you do it, sir. Don't worry about the shortcut. I will skip this. So some students will say, sir, tell important topics. I will only review that. Other things I will skip and all. I know that our heart to kidney mind will say that. Nobody wants to study so much. But you need to put in, sir. At whatever level, if you do know, I believe having everything better in our hands. Then depending on Allah, Shiva, Jesus and all, better depend on you. So all you have to do is this only. Syllabus you revise. You don't have to do too many things. As I keep telling right from my foundation in today's. Once preparation, once revision. More than enough to crack the examination. One revision is a must, otherwise you will not be able to recall the concepts. This is all you do it. If you have more time or if you are looking for an exemption rank and all, increase your revision time. That's all you need to do. That's all even rank holders also do. Okay. So a number of times ka revision. Okay. Daily basis may take up that particular assignment. Things will become easy. Little bit of planning. And your articleship students, you plan for audit too. Just like that, you go and do audit for your own sweet days. Now client is giving good food. I will stay for 1 month here only. Or you will plan and do. You'll plan, 1 week, 1 month like that. You'll properly plan and go. Same studies also a little bit. You plan and execute. Not just planning. Today I will study for 2 hours. Then open the book and say, tomorrow I will study for 4 hours. Backlog of yesterday's and today's. That's not required. Day-to-day targets you make and you satisfy. Things will go smooth. Don't worry. And FR is a scoring paper because of the sheer volume. Be comfortable with this, the things. I'm sure you will get I will get a good news that all of you have scored exemptions after exemptions after exemptions. Okay, nice to hear. No, at least early morning we'll have some good talks. No, whether we get or not is a different issue. That's okay. Okay, fine, sir. Till here done. So how many more concepts, sir? Another 2 more concepts I think we have for the day, 2 or 3 more, and then we have some questions to be done. Now, can I do 1 or 2 more and give you a break? Would you be okay with that? Or already, no. 1 or 2 more is okay? I mean, just a small, maybe 15 minutes. Can we pull through for another 15 minutes? Manageable. Online to stop responding me only. Hey, respond online. Papa, one hand with sapading dosa. Okay, fine. Next one is measurement at recognition, or let's do a thing. How much of it you remember, we will see. Or is it okay? Once I'll review this concept also, and then we'll have a quick recap. Okay. Measurement at recognition. Sir, this is to recognize new part. We have to check 12 months criteria, sir. Or if the car ka battery is less than 1 year, what happens for checking? Someone's Ramya ka question is, sir, what if battery ka life itself is less than 1 year, sir? What if battery ka life itself is less than 1 year? Then you do the same calculation, but that battery, will it have any carrying amount or it will get fully depreciated? It will get fully depreciated in that case. Okay, that's all it is. Doubtful that they'll ask like that, but if they give it, you continue with your same calculation, but it will get fully depreciated. That's all. But usually that will raise some question, that because PP means usually you should expect the benefit for more than 1 year. So that clash of provisions may come, or you could put another argument also. That, so one argument could be, sir, battery itself is less than 1 year. Why are you capitalizing it? You transfer it to SPL. One argument could be that. Another one can argue that battery has an effect on other parts also. So it gives you indirect benefits also. Like that also you can put forth an argument. So you need to assess on a practical level what works out and take it. But examination wise, doubtful. They will give you some life. Because otherwise every student will get the answer right now. The battery life is 1 year means anyway they know that it's got fully depreciated. They will keep some life in exam is what I'm trying to say. Valid question, Ramya. Okay, ma. Moving on to the next. Next one is, sir, PP, sir, all the property, plant and equipment, doesn't matter whether it is a building, machinery, computers, whatever. Initially, all the PPs are recognized at cost. All the PPs are initially recognized at cost. The cost for this purpose, we can put it under 3 buckets or categorize them under 3 buckets. I've written it here for you. Initially, all PPs are recognized at cost. Cost for this purpose, one, you can call it as a purchase cost. One is a purchase cost. Obviously, sir, without paying money, can you buy any asset? No. So is purchase cost a part of your cost? Yes. That is one. Normally, when you buy a initial any asset, there will be some GST and all you will pay. So if you have any non-refundable taxes, you can add. Non-refundable taxes means ITC not available. Input tax credit not available. If you are able to claim your GST credit, then you cannot add it to the cost of PP, because it is not really your cost. If you think, one hand you are paying, another hand you are receiving it. So is it really your cost or no cost? For those, if you have any non-refundable taxes, if you have paid, then you can add it to the cost of PP. Similarly, at the time of purchase, if you have any rebates or trade discount, if they give you any trade discount, reduce it from the cost of the asset. This is the first component of the cost. Okay, again, all this, straightforward question will not come. They will give you all this as a data in a bigger question. There we have to see what needs to be added, what needs to be ignored or deducted or transferred to P&L. We will see us solve such questions also a little bit later on. First, let's review of this. This is the first section of the cost. Okay, I'll just simply call it as purchase cost. Another one is DAC and DSR. Second one is DAC. Third one is DSR. DAC means directly attributable cost. DAC we call it as a directly attributable cost. Here it is there somewhere. Don't know where. Here. Directly attributable cost. DAC. For our class, sir, the short forms are only for class. Don't write it in examination. Just to make the things more interesting and easy to remember, we have given the small shortcuts. Exam may always write the full forms. So DAC for directly attributable cost. Now let's say I purchased a machinery. Can you tell me some of the examples of DAC? Let's see. Name itself is saying directly attributable cost. It was there in AS 10 CA intro also. Freight charges, installation charges, assembly charges. Yes, all that. Sir, when you buy an asset, immediately can you use it, or you may have to incur some expenditure? Now let's say when we purchased this building, all this was not there. All this internal, like if I remember, all this, some modifications and all we did, right? Initially, I think that was two classrooms initially when we bought it. Then we constructed a wall in between and made it as, I think initially it was 2 classrooms. We cut the wall and made it as 1 classroom. Because in one batch, almost 150 CA students, inter students came. We couldn't accommodate. So we had to kind of break that wall. Okay, and then we had to make the 2 classroom into 1 classroom. So all that only we call it as DAC. DAC means those costs incurred to make PP ready to use. Ready to use. Now, if I have to install iPad, means can I install it right away, or I have to install some softwares first? I have to install some softwares first. All those installation charges, the delivery charges only we call it as DAC. Basically, DAC means simply those costs incurred to make the PP management ready. Because who's going to use the asset? management. So any direct cost incurred to make the PP management ready only we call it as directly attributable cost. Okay, Saru? So far okay. Okay, some of the examples of DAC it's given over here. Again, just review them. It will come as a small case study in your bigger question. Okay, first one is cost of site. Some of the examples of DAC is cost of site preparation. Now let's say, sir, I want to install a machinery in my factory, but my factory is like this. The ground, it's not leveled. It is like this, Humpty Dumpty. Now, can I install machinery in that area, or I first have to level it? Have to level it. That leveling charges only we call it as site preparation. Now you tell me, unless I prepare my site, unless I incur my leveling charges, can I install my plant and machinery? Can I use my plant and machinery? No. To make the machinery ready to use, is this leveling charges required? Yes. That means it is a DAC. And will you transfer this expenditure to P&L account or capitalize? So all this DAC cost will not be transferred to P&L, rather it will get capitalized, added to the cost of PP. Those are some examples. Next one, as you called out, is your delivery and handling cost. Obviously, if I'm, let's say, buying a machinery from Japan, it has to come to India, means we have to incur some transportation charges. Unless I incur transportation charges, will it come to my factory and will I be able to use it? No. So this is also an example of that. Installation charges, assembly charges, and only after installing we can make the asset becomes management ready. So this is also an example of that. So if that installation is handled, sometimes the machinery will be complex, sophisticated machinery. So we took the help of one engineer who is overseeing this inspection charges. And will that engineer work at free of cost, or we have to pay him some money? Pay him some money. So any professional fees paid towards buying the asset or installing the asset also becomes your a DAC example which can be added. So far okay? Next is testing charges. This could be one of the important concept. Now, sir, let us say I'm a shoe manufacturer, sports shoes manufacturer. Okay, let's take the example of, let's say, Puma. Sir, will they manufacture randomly any shoes and just sell it, or they have a specification? They're very clear what type of shoes they want. Yes or no? It should be of this size only. It should be of this color only, this texture only. They're very, very quality wise. They are all top brands, are very particular. Yes or no? Even slightly if it is off, then will they sell it normally or no? They will reject it. Yes, no, it comes under the factory rejected. You know, we have factory outlets around where those rejected goods only will come, and we will buy like, hey, branded macha. But at the end of the day, some button gear would have gone there. That's the reason they are selling it at a lower price. Now come back to this. Let us say Puma, okay, they want to manufacture a sports shoes and sell it to the customers. To manufacture a shoe, they need a machinery. Okay, they bought a machinery. Now, immediately will they get the shoes, or first they will test? They will use the machinery initially and see whether they are getting from that machinery a proper shoe. That means to know that they have to incur some what? Testing charges. Initially, they will do a demo. Just like that, some of you are attending our demo class now. Correct? No, first day we will see, then we will see. If he is fine means I will come tomorrow, otherwise, Ogollo. Yes sir, no. Correct? Same thing companies also will do. Before they release the product into the market, they will test whether these products are fine. So let's say Puma incurred 1 lakh rupees of testing charges to see whether that machinery is producing the right quality of the shoe. Now you tell me, sir, where should we transfer this testing charges to? To SPL or capitalize? Capitalize. Why? Suppose the testing is failed. They did the testing charges and this tester failed. They wanted a specific variety of shoes. Did they get it or it did not get it? Did not get it. That's the reason test we are saying is failed. Now what you will do for this 1 lakh rupees ka testing charges? Testing charges you will capitalize. Why? Because what sir? What is it sir? Ind AS 16 says that till the asset reaches management usable condition. Till the PP reaches management usable condition, any directly related cost you can go on capitalizing. That's the cutoff in AS 16 and accounting standard 10 says. Now you tell me, sir, only before testing charges only can company use the plant and machinery? No, the company can produce the right quality of the product only after the testing has been done. So that means, is the testing necessary for that asset to become management usable condition? Yes. And this testing charges is related to machinery also. Yes or no? That means the testing charges is an example of what? It's an example of that. So in this example, if Puma has incurred 1 lakh rupees testing charges, means that testing charges will be added to the cost of the asset. In my example, the PPE ka name is what? Plant and machinery. So 1 lakh will be added to the cost of plant and machinery. So far, okay? Or to just summarize in one line, testing charges, what you'll do? Capitalize, because that is also an example of DAC. Okay, Ji? Okay, now let's take this example a little further. Puma did the testing, and what was the result of the testing? Passed or failed? Failed. Failed means, did they get the right quality of the shoe or they did not get? They did not get. Slightly, let's take an example like this. Left shoe is greater than right shoe, is bigger than right shoe by 2 centimeters. They are using a plant and machinery. From plant and machinery, they got a shoe. One shoe is bigger than the other shoe by how many centimeters? 2 centimeters. But these guys are very quality specific people. I mean, will they accept this, or it is acceptable, or it gets rejected? It gets rejected. So let's say when they did this testing, they produced 100 shoes. They produced 100 shoes. Testing passed or testing failed? Testing failed. Now this 100 shoes, will they burn it off? Some organization do, but they may also what, sir? They may like to what? Sell this. Yes or no? Because many people, sir, for Puma, 2 centimeter makes a difference. But for us, will it make difference? Huh? For us, the Puma itself is make big difference. Yes or no? I know. Puma, good enough. So 2 centimeters are all what we will make, keep and measure it. Yeah, we will buy it. Yes or no? That means what will the Puma do for this 100 shoes? It has a market, so we can sell it. Suppose Puma was able to sell the shoes for 1,20,000. They were able to sell the shoes for 1,20,000. Now what you'll do for this? Tell me. Understood the case? First, I'll once again repeat the case. Puma company did a testing. Testing passed or testing failed? Testing failed. How much they incurred for testing charges? 1 lakh. That for that 1 lakh testing charges, you are transferring to SPL or capitalizing? Capitalizing, because it is a DAC. That section is over. Now, since the testing failed, but did you get any product out of the testing? Yes. What product you got? 100 shoes. 100 shoes, is Puma ready to sell? Yes. The rejected goods also they can sell. How much are they able to sell this for? 1,20,000. What should we do for this 1,20,000 is the question. Not 1 lakh. 1,20,000, what you will do?
Testing charges, first we have to reduce whatever the net realizable value. Remaining, if it's there, then we can capitalize. Since the testing charges will 1 lakh and net realizable value of the process is 1,20,000, so nothing will capitalize, and 20,000 we should recover income.
So what Ayush is saying is you sold 1,20,000. No. How much was their testing charges? 1 lakh. This 1 lakh rupees you reduced it from testing charges because you only capitalized this much. Balance, how much extra you got? 20,000. That you transfer it to SPL. Okay, this is what Ayush is saying. In all logic sense, Ayush actually makes sense. Okay, but Ind AS 16 doesn't seem to agree with him. What Ind AS 16 says is, you don't worry about the amount. India has recommended a simple treatment. There's nothing like this is not logical. This is also logical. Ind AS 16 has given a simple treatment. Here, you are doing a bifurcation. Out of this much, how much, that much, how much, like that, you are doing a separation. Ind AS 16, no need. What did you do for testing charges? You add, right? Now you got a product from tested product sold. That product ka value straight away you reduce. Don't worry about the value. Don't worry about the value. How much did you get by selling the shoe? 1,20,000. Entire 1,20,000 reduced. Simple treatment. Okay, Saru? Okay, everybody cool with this? This is a simplistic treatment. Not that this is wrong. Okay, Ind AS has given a simple treatment. That's IFRS gives a small different treatment for this. IFRS says 1,20,000. No, you take it to SPL. In fact, 1,20,000 IAS says you transfer it to SPL. IAS means we have IFRS and we have IAS. IFRS, it's all international standards. Okay, new standards, no, are released in the name of IFRS. Old standards which are still continuing, we call it as IAS. Both are same. Okay, slowly IAS are getting replaced by IFRS. So if you check, there is IAS 16. There is IAS 16, which talks about the same thing, because India is what? We have drafted Ind AS, but we have copy pasted. Not entirely copy pasted. We have taken and we have made some changes. And this is one area of change. IAS 16 is saying this tested product sold ka money, you transfer it to SPL. But Ind AS 16 is saying 1,20,000, you reduce it from the cost of PP. and we are writing IAS exam, IFRS exam or Ind AS exam. So which one will you follow for exams? 1,20,000 you will reduce it from the cost of PP. Okay, this we call it as. Now you tell me, sir, these two treatments are same or are they different? Different. If there is a difference in treatment between IFRS and Ind AS, we call it as carve out. Any differences between IFRS and Ind AS only we call it as carve out. We don't have too many carve outs. If my memory serves right, we hardly have 4 to 5 carve outs in totality. Very, very simple ones. Okay, this is one such carve out. As in when I do the respective standards, some of them I'll call out. Not that very important, but just saying it for your reference. Done. Carve out means what again? Differences between Ind AS and IFRS. But for examination, you will always follow what, sir? Ind AS 16 ka treatment only. Again, just to sum up, what you will do for Ind AS 16 here? Testing charges you will capitalize. You will add it. If you, by doing any testing charges, if you are getting any product, if you are able to sell that product, what will you do for that sale proceeds? Reduce it from the cost of PP. Doesn't matter what the amount is. Okay, sir. This is the treatment we have to follow for Ind AS 16. So these are the examples of DAC. So that means 2 sections we have seen. So what is this concept again? Help me recollect. Initially, all property, plant and equipments are recognized at cost. Cost for this purpose are into, say, further segregated into 3 categories. 1, purchase cost, DAC and DSR. So purchase cost wala section we saw, DAC wala section we have seen. This one more we will review, and then maybe I will give you a break so that this particular one part will be over. Done? Need a minute or okay? Okay, no need to mug up the things. Okay, why am I doing this? Like here is like a quick review thing is they will not ask you like a definition of all this. They will, this scenario, like here what I told, testing charges and all, they will give it to you in one of the questions. All you have to do is plus or minus ignore or SPL. That's all you need to call. They will give you 8 to 10 scenarios. Each scenario will carry probably half a mark. Like that 4 marker question or a 2 marker question can turn up either as an MCQ or as a descriptive, depending on your luck and ICAI ka mood. That both I don't know where it stands currently. Okay, can I go to the third section? Okay, third one is DSR. DSR as in decommissioning and site restoration cost. Decommissioning and site restoration cost. Or for class purpose, we'll simply call it as DSR. DSR cost. Full form is decommissioning and site restoration cost. Let's take a small examples. Okay, sir, this particular DSR is very important from this particular standard. There are 2 or 3 concepts which if ICAI wants to ask for more than 4 marker or 5 marker or for that 8 marker, this is one of the concepts they will pick it. We have some questions, we will take it. As I told you, today we will be reviewing the concepts and small questions back in that. Bigger questions we will take it from tomorrow and day after. Okay, 3 days is what ideally I've kept this target for this standard. Let's see, or it may extend by another half a day if required. Okay, all right, this is one such important concept. I'll do a thing, instead of just blurting out the words, I'll take you through this with the help of a small case study, an example. Later we have 2 or 3 questions on this in our study mat only, which we will be solving. For now, just keep an open mind and observe. In fact, I'd given you this example in CA intermediate also, but anyways, no issues. I don't know, some of you are new people, so let's start right from the scratch. Okay, so now we are trying to understand DSR cost a little better. What is this? Sir, let us say, now more majority of us are using Geo done or dhan, whatever you want to call it. Yes. Now, sir, if you want, obviously, why do you think people buy Geo? In fact, any SIM connection or any network connection, people will buy keeping 2 things in mind. One is good connectivity, call, and good internet. Probably more than call, we need now good internet. Yeah, probably free internet if it is possible. Yeah, that is more crazy also. That's how Reliance captured majority of the market only. Yes, no. Wonderful offer, no? Give it for free. Now almost whole country is mobile addicts. You just observe, it's so fascinating, okay? Just 4 or 5 years before, okay, people like were not even probably used to that. They had all this maybe 5-6 years back, all small normal handset. Okay, people were hardly used to take out that phone from their pocket. They were busy just talking to each other. Now it is like who you are, I don't know, I don't care. I have my best buddy with me. Phone. Everybody was like, Ujju, this only. Okay. That's all. Left, right, center, give on swiping. Left, whatever it is. Yes. So we become like the whole, because thanks to Reliance, the whole country is now, I don't know what you want to call it. Either addicts or they become educated, they become eradicated, or we don't know. All right. But anyways, coming back to the example, let us say, now obviously, so people to buy the connection, they will expect a good network. Or you get the network with the help of the telecom tower. Have you seen telecom tower? Towers, right? Have you seen it on the road? No, usually this telecom towers and all will be installed in the high-rise buildings. 3rd floor, 4th floor, 10th floor, 20th floor, like this on the terrace, usually they are installed. Now let's say Reliance approached one building owner and they told, I want to install my telecom tower in your building. My telecom tower I want to install in your building. Okay. The building owner asked, like, okay, what will I get? Reliance told, I'll get you some rental income. I'll give you some money if you give me permission. That is one. All right. Now, building owner asked, how long will you install this telecom tower for? Reliance told, my useful life of the telecom tower is 5 years. So, I will like to have this tower on your building for how many? 5 years. Okay. Building owner, out of curiosity, asked, after 5 years, what will happen? Reliance told, I will take out that telecom tower. I'll airlift them, I'll remove it, and I will take it away. Building owner asked, will there be any damaged cost to my building? Reliance told, yeah, there will be some damages. Now, what do you think the building owner will tell the Reliance? What do you think the building owner will tell the Reliance? Boss, my building was proper. You came, you installed telecom tower. 5 years, you did some jugado. After 5 years, you are saying you will airlift, you will remove that telecom tower, and due to that, some damages will be caused to the building. Naturally, what will the building owner tell? You repair my building. You repair my building. And the way it was before, bring it to that condition. Before you install telecom tower, the way it was, get it back to the same condition. That only we call it as what, sir? DSR. Decommissioning and site restoration. Here, Reliance is restoring the building to its original condition. Such cost only we call it as what, sir? DSR cost. Got the meaning, everybody? Okay. All right. Let's take this example a little further. Originally, the telecom tower cost how much, sir? 50 lakh rupees, I've assumed. And telecom tower ka useful life, I've assumed it to be 5 years. Residual value of this telecom tower, I've assumed it to be 0 for simplicity purpose. After 5 years, Reliance, will they get any extra cost? Yes. They have to repair the building. That repair of the building only we call it as what, sir? DSR. That DSR cost I've estimated to be how much? 5 lakh rupees. Okay, stop. This 5 lakh rupees, what should Reliance do? Two options. Now this telecom tower is the property, plant and equipment. Telecom tower is the PP. Now this particular 5 lakh rupees ka DSR cost, two options. Either you will add it to the cost of PP, which is telecom tower, or you will transfer it to SPL. What do you think we should do for this? Think logically and tell. Okay, 1 minute. Just go back to Ind AS 16 ka definition. What does Ind AS 16 say? What, not the definition, just what and all cost can be added to the cost of PP? What did Ind AS 16 say? Does Ind AS 16 give example or they have a line? They have a line. What line they have given? Till the asset reaches management usable condition. Till the asset becomes management ready. Any directly attributable cost you can go on add. Okay, that's what Ind AS 16 say. Suppose Reliance tells, I will not incur this repair cost. I will not incur this DSR cost. Will the building owner give permission to use this telecom tower in the building? No. That means to use the telecom tower, is this DSR cost necessary or not necessary? To use this telecom tower, this DSR cost is very much necessary. That means indirectly this is what? Indirectly this is what? This is also what? This is also your DAC. DAC ka full form is what? Directly attributable cost. So this DSR is also what? DAC only. That means why do we have a separate category, sir? You could have put it under DAC only, no? Why is it necessary to have a separate category? Why a separate category for this is, sir, normally DACs come when? Later or now? No. Like one of the examples of DAC is transportation charges. Transportation charges will come after 5 years or now? Usually, majorly DACs will come when? At the time you buy the asset. But is this DSR cost coming now or after 5 years? Hence, we have a separate category because here Reliance has to incur this repair cost not now but only after 5 years. Hence, there is a separate section for this. Done now? Okay, now again, going back once again, this 5 lakh, what you'll do? SPL or capitalize? Capitalize. Capitalize means added to the cost of telecom tower. Okay? Yes, perfect. Now, the next question is, can I add 5 lakh rupees? Can I add 5 lakh rupees? No. Why? Sir, Reliance is showing this telecom tower in their books after 5 years or now? Reliance is showing the telecom tower in their books now. Is this 5 lakh rupees the cost now or after 5 years? After 5 years. That means this 5 lakh rupees, is it on present value terms or its future value? Future value. Yes, no. But are you doing the accounting in future or now? Hence, can we add 5 lakh to the cost of PP? No. We have to find out what's a present value. That's a concept. Yes, everybody. So, DSR cost can be added. DSR cost can be capitalized, but full value or only to the extent of present value? Only to the extent of present value. And you know, you are experts at finding the present value. Tell me, you have done in your intro also AS 19 and all, AS 15 and all, use present value. FM to left, right, center you have done. Correct. Now, how do you find out the present value, sir? Take the future value and multiply it by the discount factor. Now, and how do you get discount factor? 1 divided by 1 plus I whole power n. I think I don't have to discuss all this. You're comfortable with this. Discount factor will be given to you in the question. If at all they ask you DSR question, discount factor will be given. For simplicity purpose, here I've taken discount factor to be 10%. Now you tell me, sir. Let's see how well you remember. Calculate present value. Let's see. All of you. Work it out. I know that you know. Oh, calculator tandilva. Oh, someone is taking out. Mobile is there, sir. I don't know whether mobile works. It works. I don't know how to calculate in mobile. Okay. Okay, no problem. If you have not got calci, no issues. So now this 5 lakh rupees is what? Future value. 10% is a discount factor. So we'll have to multiply the discount factor for 5th year. How do you get that? 1 divided by 1.1. In your calculator, you have to do 1 divided by 1.1. Press equals to button how many times? 5 times. Why 5 times? Because this DSR cost you're getting now or after 5 years? After 5 years. So do 1 divided by 1.1. Press equals to button 5 times. My calculator is showing 0.6209. You must be getting. Those of you who have calci must be seeing this. Calculator always better to have once. FR, practical paper. So we will have a lot of calculations to be done. So get one. If you don't have one, you can get one from your office. And give it back to office only if you can. That is anyway. Second part, I leave it to your best judgment. Okay, but at least get one to the class. Okay. So 5 lakh rupees is the future value. When you multiply discount factor, you will get the present value. So which cost will you capitalize in this number? Now you have 5 lakh and you have 3 lakh 10,000. Which one will you add? 3 lakh 10,460 you will add. Okay, Ji. Just on the curious side, I will tell me the journal entry I need to pass for this. I have written it, I've passed here. Okay, I just want to know your understanding. So you guide me. 1 second. Online till here are the numbers looking good. We will solve, okay, 2-3 actual DSR questions we will solve, but later. My idea is I want to revise the concepts as many times as possible. Hence, for some basic concepts, first we are reviewing it and simple questions we'll take. Again, when I do a bigger question, I'll recap you the concept once more. So it will become like multiple times revision and so it gets restored. That's the idea. Okay, so they're saying got it. So tell me the entry for this, sir. Let's see. First for telecom tower, you tell me. Reliance purchased this telecom tower by paying 50 lakh rupees. So what is the entry? PP account debit, or maybe I'll pass it off. 1 minute. 1 second. So we will write telecom tower. That is a PP. To what account? To bank account. How much? 50 lakh, 50 lakh. This will be passed in which year? Here. Done. Okay. This one. Second one, is this the only component or one more is there? That is a DSR. Now DSR, actual cost of DSR after 5 years is how much? 5 lakh. But will we add 5 lakh or will we add present value? And how much is the present value of it? 3 lakh 10,460. So tell me the entry, sir. For this 3 lakh 10,000, will you transfer it to P&L or capitalize? Capitalize means PP ka balance will increase. So the journal entry I have to pass is what? PP, that is telecom tower account debit. How much value? How much is the present value? 3 lakh 10,460. Okay, now. Can I write it as bank? Sir, if I have paid this money, I would have written to bank. But have I paid this money now or I will incur this after 5 years? I will incur after this 5 years. That means I can't write bank. I'll write rather to provision for decommissioning and site restoration cost. This is the entry we'll pass for DSR. Okay. Sir, why provision? Sir, because all these are pakka numbers or estimates. Reliance is estimating that after 5 years, repair cost can be 5 lakh. That's the reason we made the provision. That means provision can change, sir? Yes. Sir, if it changes, what to do, sir? Third day's class. One question I will tell you. What if this provision for DSR ka estimate, if it has changed, what to do? After 2 days, we have such question, we will take care. But now I'm only discussing the basic accounting concepts, what we need to do. So far, okay? Now, instead of passing 2 journal entry, anyway, both you will pass it at year 1 ka beginning only. So instead of 2 simple journal entry, you can do a compound entry. That's what I've done here. If you do compound entry, what will be the entry? PP debit. Adding these two, how much? That's what I've done here. Telecom tower PP account debit 53 lakh something. To bank account 50 lakh. To provision for DSR 3 lakh 10,460. Any questions or any doubt till here? No, sir. All cool. Okay. So since I've just started this concept, I'll take you through all this. I mean, fully we'll cover off this. Need a minute for more review or okay? Okay. Stop there. Check. Sir, how much provision have I accounted now? At year 1 beginning, how much provision have I made? 3,10,460. But are we going to settle 3,10,460 or 5 lakh? Currently, the provision is standing in our books at 3,10,000. But how much are you expecting to pay? 5 lakh. That means what, sir? As the time passes from 3,10,460, provision ka balance should be increased and it should be brought to how much? Okay, because the difference between these two only is what, sir? This is the present value, this is the future. The difference between present value and future only, we account it as time value of money ka interest charges. That we call it as finance charges. Or another way, or to do it, it's how to do it. Let's review this. For this, we put up one table. This table is very popular in many topics of CA final. Many standard Ind AS 16 use this particular table. I'll do a thing, maybe instead of reviewing this, let's solve off this just to be on the safer side. You don't have to copy. In your sleep also, you will know this table once I get to the next topic, because in the next topic, almost 10-15 question makes use of this table. So once quickly, I will write it. Okay. So I am trying to find out provision for DSR. Another 10 minutes, people. Hope you can bear. Even if you can't, bear only. Okay. Here, opening balance. Sir, we are at first year beginning. How much have I accounted provision for DSR? 3,10,460. Okay. Now I will settle this provision when? 5th year. Okay. That means at the end of 5th year, my provision for DSR balance should become 5. From 3 lakh, its balance should become 5. The difference between this 3,10,460 and 5 lakh only is nothing but time value of money ka interest charges. Now, this table is trying to give you how much is finance charges for every year. How much is the interest charges for every year. So, it's very simple calculation. So, interest charges. Sir, here, what is the discount factor here? In this case, when we looked at it, what is the discount factor they gave? Discount factor is 10%. So, the finance charges you will book at the rate of 10%. So, the simple funda. It's like, think like this. You have taken a loan of 3,10,460. Think like that, just for easier for accounting or comprehending things. You have taken a loan of 3,10,460 and bank is charging interest rate at what rate? 10%. What will be first year interest? Can you tell me? How did you get that? 3,10,460 ka 10%, which is how much? 31,046. Okay, that means can I number them? 1, 2 and 3. If I want 3, what will I do, sir? I'll take 2 and multiply 10%. Is my statement right? Okay. Now payment. Have I made any payment for DSR cost in the first year or no payment? No payment. That means what is the closing balance? Now tell me what is the loan balance. So when I took the loan at 3,10,460. Now on this loan, I have to pay how much interest? 31,046. Did I repay any loan in the first year or no repayment? No repayment. That means what is my closing balance? Can you tell? Perfect. That means how do I get my closing balance? Tell me. So if I want to call this as 5, how do I get that? Take opening balance, which is there in column number 2. To this you add interest charges. And if you have any payment, when you repay any money, loan balance will be same or it will reduce. So that means column number 5 is given by 2 plus 3 minus 4. Do it. Adding this quickly, do it and tell me. 3, 4? 3, 4, 1, 5, 0, 6. That is provision for DSR ka first year closing balance. Initially you accounted at 3 lakh 10,000. At year 1 beginning, provision balance was 3 lakh 10,000. At the end of first year, from 310 it has become 341. Like this, as and when the time passes, provision balance will go on increasing. At the end of fifth year, its balance should become 5. And then you will settle 5 lakh and its accounts will get closed. Yes, people. So first year ka closing will become next year ka opening. So next year ka opening I will write 341,506. So calculate second year ka interest for me. Anyway, 10%. Now cut off 10. So it will be 31,150. Are you making any payment? No. For first 4 years, no payment. I mean, what is the closing balance? These two you add, minus 0 you do. In fact, nothing to be done there. How much is this? 3,75,000? 656. I'll round it off. It's okay. Second year ka closing will become third year ka opening. Okay. This is your third year ka opening. Now on this, this is your loan amount. On this you calculate 10% interest rate. So that means the interest will be 37,566. I'll write. Again, no payment. These two you add. This one you minus. You'll get closing. How much? 413,222. Okay. Third year ka closing will become fourth year ka opening. So fourth year ka interest will be 41,322. These two you add. How much are you going to get? 454. 544. Correct? Fourth year ka closing will become fifth year ka opening. This is the number. Last year there might be some slight round of error because in discount factor may not be exactly 10%. They would have rounded it off this. So last year, depending on the how big a number, bigger the rounding of error. Sometimes rounding of error could be 400, 500 rupees also. Okay, depending on the number size. Here I think in this problem you get 50, 40 or maybe 20, 30 rupees ka round of error. So 1 second. Fifth year, how much payment you need to make? File. Once you have settled, should you have provision or provision is gone? That means the closing balance should become how much? Okay. So fifth year, this is the payment. Yes, no? Okay. After you make the payment, provision for DSR balance should become 0. So last year, don't calculate the interest. Get interest as balancing figure. Do this way. 5 lakh minus 454. These two ka minus you do. How much you going to get? These two ka minus if you do. How much is your calculator showing? 45,456. I think there is a 2 rupee round off here. That's all. Okay. So then in bracket you write it as rounded off. That's all. This is the calculation. Done, people. This is your present value and future value ka accounting. That's what I've done here also. Same calculation I put it up here with little better handwriting. Okay. But anyway, I wanted you to be a little comfortable with this, so I just put up the whole work. Yes. Now based on, or 1 second, online also. Online is also okay. Okay, another way, check once more if you want, you can check it. Sir, how much did I capitalize DSR cost? Did I capitalize 5 lakh or I capitalized to the extent of present value? Present value. How much was my present value? 3,10,460. How much was my future value? 5 lakh. Find out the difference between these two. These two ka minus you find. Difference of these two. 189,540. If you add all the finance charges, you will get 189. So the difference between these two is 5 years ka total interest charges. The difference between present value and future value will give you total interest charges. This table will give you each year ka interest charges. So if you sum it up, this number also will be giving you the same thing. Understood? That's what I've given it over here also. Now, okay. Okay, now the entry. If you are comfortable with this calculation, I think entry also you will be comfortable. Tell me, once again, go back. Tell me the first journal entry you passed. PP account debit to bank. Okay. Then that's all or one more simultaneously? One more is what? PP account debit to provision for DS. At full value or present value? I have done this entry as a compound entry. Yes, sir. Okay. Now, at year 1 beginning, this entry will be passed at year 1 beginning. At year 1 beginning, what is my provision balance? 3,10,460. Should it be 310 or I have to go on increasing it? Increasing it. As the time passes, I have to go on booking the time value of money ka interest charges. On your liability, will you get interest or you have to pay interest? If you're confused whether it is interest charges or interest income, think of it like this. This provision for DSR, you will receive or you have to settle. That means this is it's a liability, or you can think of this like a loan. Loan given or loan taken? Loan taken. On loan taken, you will receive interest or pay interest. It means here it will be interest charges. Ind AS uses the terminology finance charges. You can book interest charges also, or you can call it as finance charges. Tell me, sir, what is the journal entry for interest paid? Interest paid, what is the journal entry? Interest account debit to bank. Here, are you paying interest every year or it is just an accounting sake? It is an accounting sake. That means the entry for interest will be finance charges account debit. To what? To bank? No, it will be to provision for DSR. Okay, because you are settling 5 lakh in totality. You are not settling every year ka interest. So hence the entry will be, instead of finance charges to bank or interest charges to bank, it will be finance charges to provision for DSR. And how much is every year ka interest charges? That this table will give you. This table gives you every year ka interest charge. Like first year ka interest charges is how much? 31,046. Second year ka 34,151. This is what I've done. So this is a columnar presentation of journal entry. I feel this is acceptable, but ICI does not do this. So the choice is yours. Either you can pass all the 5 years ka entries separately, or you can do entries like this. In my view, this is okay, but I will leave it to your judgment. Okay. One advantage of this is, so this entry will only come once or it will come 5 times. 5 times. The advantage of presenting in columnar format is you don't have to write the same journal entry 5 times. You can write it only once. Or better approach, maybe what I can suggest you is take the availability of time. If you have time, pass each year ka journal entry separately, like ICI. If you don't have time, do this columnar presentation. Maybe that you can keep it in examination. In my view, this is acceptable. That's all I could say. Okay. So far, any problem or okay? Now, at the end of 5th year, provision for DSR, will it have balance or you have to settle it? What's the journal entry for liability settled? Creditor paid. What is the journal entry? Creditor to bank. Provision for DSR settled. What is the journal entry? Provision for DSR account debit to bank. Which year you will settle? First year, second year, third year or last year? Last year as in 5th year. 5th year mein entry will come for how much? 5 lakh rupees. Okay, sir. That's after this account, that provision for DSR will finally become 0. And normal entry on your PP, you will also have to calculate depreciation. That depreciation entry will in each way come. Entry is depreciation account debit to PP. So this is your accounting for DSR from the beginning till the end. Yes, of course. Entry I have not done. I have written here. This finance charges and depreciation both will be transferred off to SP. You can pass one separate entry. Saying I paid full fees, pass one entry. No, I'm done. We'll pass that also. So next entry, if you want to pass is every year you'll write SPL account debit to finance charges, and even depreciation will go. So both I will do a compound entry. Amount you pick it up from that about table. Okay, yes, it has to be. I've written here only. It should be going to SPL. This is your end-to-end accounting for DSR. More detail, maybe we will discuss this later on. But you got a basic idea how to do the accounting, what should be the accounting. This is a very important concept for examination is concerned. Any question beyond 6 marks from this topic, 95%, more than 95% chance it will be DSR concept. Okay, we have 2-3 questions. I'll take it up. Today, definitely no. Today, possible if you sit for 12 o'clock, 1 o'clock. I'm sure you will not sit. I'll only be looking at the camera and talking. So today, no. Tomorrow we will take care of that. Yes, that's all is this concept all. Okay, I think that's enough. So we will probably take a break and then we will resume the class. Fine, no? Sir, since we lost a little bit of time to do that security guard issue today, so we will take a shorter break. Would you be fine with that? Anyway, 9:30 compulsory. You have given me a deadline. You have to leave. No, today no deadline. Today only 1% deadline. Oh, today holiday. What about online? How many of you are still in the articleship here? Show of hands. No, matlab, 1 second. Let me rephrase the question. How many of you actively go to the articleship? Not on the paper articleship. Okay. I think I should not speak wrong words on camera. But anyway, saying actively going for articleship. Everyone is going. Online also going. Today leave. But in general, you go. Okay, fine. Just asked because I wanted to know, is there any possibility to extend 15-20 minutes beyond? So you already made it clear that it is not possible. Fine, fair. Good to know the clarity. Okay, fine, sir. Let's take about 10 minutes break and resume with the remaining concepts. Or maybe one choice. You want to have a recap now or after break? After break. Now you want break, Pakka. Yeah, we have decided. Enough now. Okay, fine. Let's take a break and then resume. Thank you.